Wholesale cannabis prices aren't the only thing plummeting. Retail prices are dropping as well. So with this headset report, we're going to take a look at consumer purchasing in the cannabis industry decreasing by comparing pre-pandemic sales of 2020 and 2021. Try to find out what the slowing is all about. So we're going to try to dive into all of that coming up.
It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Sales inevitably in 2020 are going to have this asterisk next to it. It's going to be an anomaly for everything else. So long story short, this report is saying that basically these massive spikes that we saw were about the pandemic. And now that things are going back to normal, people are going back to work, some of those sales are going to return back down to pre-pandemic levels. So making it look temporarily or artificially declining. I've said that with wholesale prices declining, it's more about the overall economy, and that if people are pulling back on vices, they're pulling back on everything else before then. So, is it just the pandemic and that other people were getting in the industry, and now that they're gone, we'll go back to normal? I don't know. I think it's maybe more not transitory inflation, but inflation. It's pricing pressure on more expensive stuff, and people are making alternative choices. And if it's hitting your vices, then it's hitting everything else as well. So we're going to take a look at this report from the mindset that maybe it is just the other folks who got into the industry from work from home, and now that they're gone, prices are coming back down. So I'm going to kind of give this report a grain of salt, really, because I think personally, this is a long-term issue that no one's talking about. You're not going to see this on CNBC, Bloomberg, Wall Street Journal Report, or anywhere else because nobody wants to talk about it. I think we're starting to see that the impacts of the economy and inflationary pressures being put on everyone's having to make different choices. So with that, let's dive into same store sales growth, heavily influenced by stimulus. Those stimmy checks made a huge impact, and you can kind of see that in the graph. It speaks for itself. So we're going to take a look at Colorado as an example and see wild swings in the week over week growth, mainly due to the pandemic related shutdowns and then the panic buying that we saw. So a lot of the consumer product goods or CPG products are similarly impacted. The consumers rushed to fill in. You saw that with toilet paper, right? All of these things that were from March into early April of 2020. And you can see that the stimulus that people got directly related to increased sales. Very, very clear, like when the checks came out and when people went out and bought cannabis. It dwarfed 420. The third US stimulus check was way more than 420. People were going into the stores beforehand. So the stores knew that with the limit on the number of customers that they were going to offer these deals throughout the week. And so 2020 was an exception. 2021, don't forget about it. Nobody even cared about the pandemic. There was no sales leading up to that week. Even the day before, there weren't. So there was a lot of increased sales around holidays too, Labor Day, Memorial Day, and then sales of 420 don't even look remarkable, mostly again because leading up to 420 made the depressed sales, and then afterwards, that's common. So when you see the sales really plummet after 420, that's pretty much always the case. Looking at all five markets for California, Colorado, Nevada, Oregon, and Washington, some differences on the individual localities like Nevada, which got hammered during tourism. And you can find that Colorado is on par with those in the other markets, like seeing week over week increase in through 2020, early 2021, and then slowing through the summer and fall of this year. And then taking a look, basically the same thing with a different graph that 2020 demonstrated massive amounts of growth. That's not sustainable. It won't be sustained beyond 2021. And I think that's kind of the main takeaway from this, is that they don't believe that the work from home folks are going to be using as much as they were as they kind of go back to normal. So that's the anticipation from this report, at least. So some of the older markets, or the legacy markets, saw prices rise through the start of the pandemic and fall through 2021 using California and Colorado to track those prices. They're now below pre-pandemic levels. So again, falling prices common in all markets, and the five older markets that are around are observing those prices below their pandemic levels. And like Nevada, Oregon, Washington, they remain above pre-market levels, but Colorado, California, sitting well below pre-pandemic levels. So this could be a factor of competition, with California, Colorado enjoying a considerable interest from investors and new products and brands entering the markets. Both have seen investment interest in retailer acquisitions from major MSOs. California's continue to give licenses, increasing their competitive pressure on existing retailers. And then both those markets, Colorado, California, continuing to see conversion of medical only licenses into combined medical adult use, is further increasing that retail competition until it all plays out. Colorado and California prices are now below pre-COVID levels, driven by increased discounting. So we can examine an average retail discount, find that the discounters are generally trending up in Colorado. California saw an increase in discounting through the latter half of 2020, and it's fallen a little bit this year, but increasing again in recent months. Discounting is growing in other markets, with an average discount. Nevada is up almost 15% from just 9% last year. Oregon, their discounts went from 9.5% to 13.5%. And the newer markets are facing increasing price competition and are therefore offering higher discounts. Michigan, for example, their on average discounts is 20%, is doubled. So consumers in Illinois are trying to get that average discount to around 12%, up from 2%. Loyalty data from stores in California. 90% of the sales that Headset tracks in California have loyalty data. So using some information, you can understand the intra-consumer purchasing trends. And most notable is the increase in the yellow bars, representing the percentage of consumers that spend at least $200 in a 3-month period. So in 2020, 26% of consumers spent at least $200. So this is supporting the hypothesis that sales increases in 2020 were heavily influenced by increased sales to consumers that were already in the cannabis market, rather than driving incrementally new customers into the space. So as life has returned to normal, consumers are spending levels back to normal. So contrary to what I said before, where I thought this report was going to be more about new entrants, I guess it's about heavier users kind of dialing back down a little bit. So I don't think so. I mean, I was smoking 2 to 3 pounds a year. That's an ounce every 2 to 3 days. And I was doing that in 2019. And as the pandemic hit, I cut way back because I was worried about combustion and all the fear porn about smoking was going to cause you the worst COVID reaction, whatever. So for a little bit, I pulled way back. And then I've since that was too much. Let's be real. So I'm doing, a pound a year, maybe 1 3/4. I'm doing less than 2 pounds at least. So look, give me a break. It's about half of what I was doing before, but that was ridiculous. I did Sober October. I did a video about it where I didn't smoke at all for a month after smoking every day for over 10 years, probably. And that was interesting. So there's a lot of interesting data on that. If you want to know what it's like, I wore a Fitbit and really tracked REM and deep sleep and everything with using just CBD and then no cannabinoids and everything. So if you're interested in that, look it up. Kind of an interesting deal. And I'm going to be doing that again probably next year. So looking at same store sales, sales have fallen from record levels in 2020, but trends are still above pre-COVID levels. So again, examining those same store sales growths, looks like at the very early on, March of 2020, sales were about 1.5%, or they were up 40 to 45% compared to just a few months before that. And in the summer of 2020, sales were eclipsing 60% of their pre-COVID levels, and then sales climbed in the spring of 2021 after that. So they've fallen from their fourth quarter 2020 baseline, but still remain elevated above pre-COVID levels. So that's supposed to be more support to the hypothesis that the recent slowdowns are due to consumer demand returning back to normal levels rather than a broader market issue. And the final chart kind of showing Colorado, most notable rise in flower consumption throughout the pandemic and its notable decline in recent months. So the categories that didn't experience like a large boost in sales during the lockdown also didn't observe a rapid fall to pre-COVID levels. So flowers share had been waning pre-COVID as consumers switched to methods which were more convenient to consumers like pre-rolls or vape pens. And then sales have stayed above those Q4 2020 baselines, and pre-roll sales remain elevated compared to pre-COVID levels. So again, believing this supports their hypothesis that increased consumption in the cannabis enthusiast segment has waned as societies return to more in-person activities. And it's believed by Headset that the stabilization back to pre-COVID levels means that the further falling of sales and trends are not going to happen. That what we did see in 2020 wasn't sustainable, and that it's just rebounding back to normal rates. Whereas I would agree with some of that. I think there's just a lot of price pressure on with inflation. So that inflationary pressure, whether it's housing or groceries or otherwise, I think is also the reason why people are pulling back. So I guess we're just gonna have to find out.
With that, we're gonna roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.
Don't forget to smash that like button on your way out and check out these other videos that we've got.